Hello everybody, my name is Alina and you are watching FBS Analytics and Education. Today we will discuss top 5 key market events that can bring wonderful opportunities to trade. Let's go! Let's start with traders' favorite, the American non-farm payrolls. Usually every first Friday of the month, the US releases how many people got jobs, what is the percentage of people who want the job but don't have it, and how wages increased. These figures don't include farm industry due to its seasonality. For Federal Reserve, NFP is a crucial factor to rely on. The more people got the job, the better it is for the economy. And vice versa. If the unemployment rate is too high, the government tries to stimulate the economy and they decrease interest rate. They lower the interest rate and the demand for the dollar is declining as well. So now we have the opposite situation, rising rates and rising dollar. For Forex traders, NFP is certainly really important. They see how USD pairs react, and gold is also the great idea to trade on NFP release. If you don't believe that NFP can provoke volatility, let's look at the example of NFP results. The expected NFP results as of January 7, 2022 were 426,000 job added. The actual result was disappointing with only 199,000 jobs added. As a result, volatility increased and the dollar index lost about 500 points. This release has many names, however, the point is still the same. Major countries release their interest rate update every month based on the different factors, such as inflation, for example. Countries' central banks release their key interest rate update due to the situation. And if they increase the rate, the national currency is growing. Usually with the cash rate announcement, they have a certain statement of their future monetary policy, and you shouldn't underestimate it. Depending on the country, the currency will move. For example, if it is a Canadian release, the CAD will move. And consider trading not only the usual pair like USD CAD, but to another pairs like CAD GPY or Euro CAD. Let's look at the example. On the chart now, you can see that the release data provoked a significant drop by almost 1,000 points. The Consumer Price Index shows the overall inflation, and the country's central banks rely on it when they set interest rate. At the moment of shooting this video, the world is struggling with serious inflation. Such countries as the US and Germany have the highest CPI in 40 years. CPI release brings wonderful opportunity to trade not only currency pairs, but gold as well. As the greenback reversely correlates with gold, it brings more opportunities to trade. By the way, did you know that the gold is traders' favorite asset? During the CPI release, our team usually go live in our Telegram channel. Join FBS Analytics there and let's trade together. The Organization of Petroleum Exporting Countries usually meet 2 times a year, but now due to the geopolitical circumstances, they meet more often, almost every month. The representatives of 15 oil-rich countries decide their future goals and, most importantly, how much oil they are going to produce. They also discuss the energy market in general. This conference usually closed to the press, however, the representatives usually talk to reporters during the day. Besides, they post an official statement of the future of oil producing. The OPEC countries provide 40% of all oil reserves in the world, and they unify the oil producing. With such strong control, they can measure the amount of oil in the world. and they want to say that they are like the island of stability in the world. Any OPEC changes provoke significant fluctuations of oil price, so use this rare opportunity to trade WTI and Brent to see if it can lead to great results. And the last but not the least is GDP. The gross domestic product is one of the basic indicators of country's economy health in general. It reflects the market value of all goods and services produced in the country in all sectors. When GDP is growing, that means that the country's economy is growing and everything is fine. So when we convert the GDP to the price of a certain currency, for example, United States dollar, we can compare different countries' economy. It is the evidence of the productive economy growth or the decline of the fading economy. Currency traders follow the GDP release, hoping that it will be higher as the national currency will go up and the government will increase the interest rate. And you remember what is happening when the central bank hike their rates, right? Traders check what country will publish their GDP and they choose the currency to trade due to that. So, for example, if it is Japanese release, they will trade JPY. So, I really hope that this video was helpful for you. Don't forget to check economic calendar to see the upcoming events this week. And also don't forget to like this video and subscribe to our channel so we can meet each other again. Bye bye!